Cobus, thank you very much for joining me today. I wanted to start out by talking a little bit about South Africa. South Africa remains one of the world's predominant mining countries, fourth largest gold producer last year. I mean, you name it, South Africa produces it. Over the last 6 months or so, we've heard a lot of bad news about the mining sector in South Africa, and most graphically illustrated with what happened in Marikana. Can you talk a little bit about what the state is of the mining sector in South Africa right now?
As you pointed out, it's extremely important and it's central to many other things. You know, it's estimated currently that for every one person that is employed on the mining side, it basically gives employment for up to 4 people around that. And also, I guess, you know, if you look at many of these mines where a miner looks after a family of 8 or 8 dependents on that one person, it has a major impact on the whole economy, on employment obviously, and the rest of the economy, manufacturing and the rest, when one do see certain mining areas become uneconomical. And I think what we've seen of late has really done confidence in general no good, you know. I think if you look at many of the investors, you know, there's some of the investors that even go as far as saying, you know, if there's no sort of stability around labor, how can you actually commit capital to a project? Because when you do commit capital, you make certain assumption and you align risk to many of those inputs that you do. And you know, if it's as loose maybe as you want to call it, as it's been late, it's very hard for an investor to say, you know, I'm happy to get a return of 15% in such an unstable labor market. And unfortunately, on the very deep and underground mining space that we have in the gold and the platinum side, the PGM side as well, you know, there's definitely a very much a dependence on labor. It makes up to 45% obviously of total costs on these companies. So I think that's the first very important point. And as we all know, if you want to grow your footprint in a global perspective where you compete against everyone globally on a specific commodity, you know, you gotta attract the capital and try and expand and make it as attractive as possible. You know, and at the moment, unfortunately, there's a lot of investors that sort of question a lot of these dynamics, underlying dynamics that sort of supposed to ultimately drive the investment case. And I think that's where it sort of sits at the moment. And obviously, it's in a I don't want to call it a transition period, but it's in a period of reorganization, I think. And you know, where in the past where you had employers and workers, and you had a lot more direct relationship between the two, you obviously got intermediaries in the face of unions. And I mean, unions is not unique obviously to South Africa, but I think what has happened over time is we had one very dominant union, the National Union of Mine Workers, and a lot of these companies lost a lot of this direct access to their employees, to be able to listen to the underlying employees and really try to work with them.
So there was a disconnect between management and the workers.
I think so, yeah. And I think because they were always sort of pointed to the unions and say, you know, the unions will speak to the workers and you must speak to the unions. And what we've seen of late is there's many of the workers that actually question, especially the National Union of Mine Workers Union, which is by far the dominant union, sort of has been on historical numbers. And how much, you know, when they sort of drive and negotiate with the companies, you know, where is the best interest of the employees rank in their priority list? And obviously there was some allegations, fraud allegations as well in the unions, etc., etc. And through that, you've actually seen that there's been, in many cases, a total distrust in the National Union of Mine Workers. And that's why we've seen many of the workers actually moved forward and said, listen here, you know, we want to personally take this up with management. We want to make sure that we get the best side of the deal here. And I think that's what we're seeing.
You used the word reorganization, is what you used just a moment ago when you talked about what's happening in South Africa. I'm sure you're familiar with it. The Economist just a few weeks ago put a front page. It was pretty much the whole issue talking about South Africa, and the word that they used was decline. You know, you live here, you work here, you see what's going on in the mining sector here. Is that an appropriate word to use in terms of vis-a-vis South Africa?
Look, I mean, I guess if you take a step back and you sort of look, as I mentioned, the National Union of Mine Workers has sort of been the dominant union, and we've seen a new union, the AMCU, which is the Association of Mine Workers and Construction, and they have emerged. They've been present on the Eastern Bushveld, on the PGM space, and they have emerged through all of this into the Western Bushveld now. And they gained a lot of success, it sounds like, in terms of membership. There's even some of the mines where they've got majority membership, unofficially, because there's some challenges to get it recognized, etc., etc. So I think one got to see that as well. And in the latest negotiations that we've seen, obviously with the Chamber of Mines, is where they try to create a platform. And they're currently debating and see whether they will also move to a more centralized negotiation basis, what we've seen obviously on the gold side. And not that has been sort of bulletproof, and sure. But I guess they are trying to look at the current model, and clearly there's holes in it, and so the point is to try and establish, I think, where is the real issues here. And how can they create a platform that will be advantageous for all stakeholders?
Sure.
Not just employees, not just shareholders, not just this receiver of revenue, everyone. And ultimately, I think that is the key point, to sort of see, that you got to maximize that pie where all the stakeholders eat from. That is the most important. I think what we've seen obviously of late is it's been destructive behavior. It hasn't been behavior that sort of promote the size of the pie or sort of enhance the size of the pie. So I think that is key. If you sort of talk about a decline or a potential decline, in mining output, given the structural issues, I guess one got to look at a couple of those themes as well. It's an area which is taken extremely serious by company and by national leadership. My understanding is there's negotiation with the highest levels in the country. There's definitely the desire to create a platform that will present a more stable environment to actually try and get the size of the pie up again. Obviously, we sit with areas like the gold space, where year in, year out, we've seen gold reserves decline and subsequently production, unfortunately. And that, is a case of, in many cases, that the low-hanging fruit have been picked.
Right.
They're looking at new ways of mining with mechanized equipment that they're trying to, and Anglo Gold, as well as Gold Fields, has been sort of very much into that area of exploring and doing research on that, and doing some tests in certain mining areas. And if they can manage to succeed on that front, then there's a lot more scope.
Sure.
But when you go down that deep, and
because they're going down like 3 kilometers.
I mean, they're going right down, and
right.
It costs cooling, and our electricity prices has obviously gone up, and there's talk that they may sort of double again over the next sort of 5 years.
Wow.
There's as much as that. Would probably be a little bit less, I would argue. But so there is cost pressures on that front, and that's the problem. When you mine into areas where grades are declining, they're struggling to maintain reserves. Unfortunately, your mining output is is under pressure, and that we've seen on the gold space, and in particular on the gold space. Moving over to the platinum side, of course, South Africa, 80+% of platinum. Rhodium, it's even more. Palladium, we're roughly one third of global supply. You can also always ask the question, what prices will the world pay? Is it a situation where you say, costs can run out of control, it can go up by 15+% per annum, and the world just will have to pay? But then I think it brings back the practical situation we saw playing out on the potash market. Going into the global financial crisis, where we saw demand totally collapse, and they tried to manipulate and keep the price up, and it didn't work. They dropped to 25% of. So ultimately, you gotta stay competitive with the global space, in my view. And this is also very interesting when you talk about a potentially declining market. Is you gotta have a platform where you can be competitive against global peers,
right,
to rightly sort of take your place in the global commodity space.
Now, within that context, by 2014, is it 26% of the ownership shares of mining companies in South Africa have to be owned by blacks? Where is South Africa in terms of that transition, and what does that actually mean in real terms in terms of the operations of some of the biggest mining companies in the world?
Look, this is no new thing, obviously. It's been going on.
We've known this for a while.
Exactly,
right.
and companies have been working on this, and it depends on from company to company. Some of them is very close or a lot closer to the 26 than other. But it is a process that's sort of playing out. And unfortunately, I guess if one sort of look on the precious group metal side, there's a lot of these structures put on prior to the global financial crisis,
right.
when the PGM producers live in a very strong price environment, and where a lot of the structures made a lot of sense and worked. Now at the moment, a lot of these structures are underwater.
Right.
And there is obviously the question that comes into play: is it once empowered, always empowered? Is it something that some people will say, no, we were handed a raw deal, yeah. But no one knew at the time. Everyone was happy to make the deal.
Right.
So it is a process. It's a process of transformation. And ultimately, it is for the greater good, I guess, of the country. In many other countries, I guess one do see royalties that has gone up a lot more. We had, fortunately, more stability as to date on that front. Nationalization is another question which a lot of people bring up.
That's something I want to ask you. I mean, Zuma took that off the table back, I guess, early in 2012, and it seems to have somewhat crept back into the conversation since the Marikana killings.
Yeah, I mean, ultimately, I don't really think the risk of a straight nationalization is that high at this point in time. I think, if there is opportunities and maybe in that space where they're looking for, it will probably come more through increased loyalties, increased community spend, the likes of those type of areas. Mining is a very specialized and a very tricky environment, to sort of execute successfully. And to some extent, I think there is some rationality in terms of that. Mr. Susan Shabanga has been very clear on that, our mining minister, saying she's definitely not supporting nationalisation, and I think she said something like not in her lifetime. So. How
much of a desire is there within the ANC to see that happen, though?
Look, I think it's more a voice piece. It's more something to put up to say we'll take here's the carrot.
Right.
Ultimately, in even some of these mines and mining areas, they would be glad to hand it over, given they're
not making any money, right?
The challenging period, around a lot of these mining areas, the challenging mining environments around a lot of these areas. So, it's not something I think that's sort of risk number one currently in South Africa. There's other areas more, as I mentioned earlier. The whole platform of labour in South Africa and trying to get more stability around that. That is paramount. That is sort of risk number one in my view. Because as I mentioned, if you don't get more stability around that, it's very hard to commit capital, as we've actually seen from some of the mining companies of late.
Well, what have we seen in terms of just raw investment numbers? I don't know how closely you're tracking that, but in terms of what we've seen happen over the last 6 months or even the last year, in terms of the amount of money being invested into the sector by the big multinationals, Rio Tinto and such, where are those numbers actually at?
Yeah, I mean, on exact numbers, it's maybe tough to sort of say,
Not to quantify it, but in general terms.
In general terms, I think we still have seen sort of capital inflows, but I think since the Marikana events played out, there is, on foreign direct investment, we have seen substantial changes. And one will see if that's just a month or 2 or 3 thing where things sort of cool down and they manage to get some normalization back into the environment, and whether capital will flow again or not. But generally speaking, I think obviously also a lot of these projects were planned well in advance, and when you sort of sent some capital over and you made some investments, those were not something that were decided a couple of months ago necessarily. There's investment programs that got to be funded and certain phases in investment programs. So it's more the question from here on on the next phase.
Mhm.
And like we've seen from our own South African miners with the likes of Anglo Gold, you know, they've spoken to some of these areas where it's really just not viable to sort of try while it was standing empty for weeks in, you know, which were already marginal at the time. You know, to really move in and invest the capital again to try and, you know, make these areas safe again and try and get things going there again. And that's the unfortunate part of it. You know, these mining companies do evaluate these assets and they will look at certain sections and they would say, you know, it doesn't make sense to actually get this section of this mine or this area back into production again. And there you see your potentially job losses, unfortunately, you know,
right.
that may come as a result of this.
Right.
You know, the gold price currently is sitting at very favorable levels, you know,
Mhm.
and if you can't mine profitably at current levels,
Yeah.
you know, there's a problem.
Right.
And unfortunately, a lot of these areas attract a lot of capital. You know, if they want to expand in areas, it's not so much the running costs, but it's first that capital commitment.
Mhm.
You know, and shareholders is all over them and saying, are you disciplined in terms of your capital allocation? You know, are you allocating it at the right prices? You know, what kind of price environment do you need to actually make these projects successful? And like we said, I think we live in a very unique environment at the moment in terms of generally world growth and what has been driving the gold price to levels where most of global miners are making money.
Mhm.
And I guess, you know, you can't sort of, you know,
Depend on that in the long term.
you got to, at some point, you got to have sort of rationalized this down and to more kind of normalized levels, if, you know, and it's hard on gold, obviously, as we all know, you know, because it's
You
almost
see
seen
gold
as a-
continuing to rise? I mean, I haven't met an analyst yet that thinks that gold's, you know, in for a big drop.
100%. How soon the US will be able to stand on its two legs, on its own two legs, without all the stimulus around that, one will have to see.
Right.
And obviously, as long as the need is there to sort of try and cushion it and keep things going, you know, there is support, in my view, for gold. Obviously, the US dollar at the moment is, I would argue, at this stage of the game, the most important driver of the gold price. So if you look at an environment where you're potentially going to see a weaker US dollar going out, I mean, you know, maybe the, you know, that is one of the inputs that the US government actually wants and the Federal Reserve wants.
Seems to be their policy.
A slightly weaker currency, you know, then, you know, that is also very favorable for the gold price. But again, you know, at some or other point, be it in 2 years, 5 years, 10 years, something's got to normalize.
Sure.
And you know, and that's the thing. Sometimes when you invest capital for these projects that are 20 years and longer, you know, you got to look at the longer term picture for these type of companies. So capital allocation has been something that I think a lot of these companies have been addressed by, you know, where shareholders has actually come forward and says there's got to be a greater focus on this.
Yeah.
You know, you can't just grow for the sake of growing. And we've seen now Anglo Gold have actually shaved back on their capex of about $200 million in the most recent production results. And I guess it speaks towards this theme of saying, I've got labor instability, I've got some areas that are marginal, and I've got capital to commit. And what is my options here? What is my risk reward looking like? In an environment like that, they tend to say, okay, let's bring, you know, some of the capex back. Unfortunately, you know.
Right. Back in September, Russia made an announcement, a spectacular announcement, said that they found, they have a discovery that they've had since the 1960s that has literally trillions of carats of diamonds in it. And it seems to be that this is actually the case. Whether or not they're going to develop that resource, no one knows. What has that done to, you know, the feeling in South Africa? Obviously, this is the home base, the headquarters for De Beers. What has that meant for the diamond industry?
Look, the diamond industry has been struggling over the last year. Obviously, we've seen 2011 has been a good year, you know, for the diamond industry. And as we know, you know, I think the first point to look at is you always have this multiplying effect on changes at retail level. So if retail level decline by 5%, it will have an impact of 30% on your underlying mining level as these end retailers sort of restock and destock. So obviously in an environment where we've seen, I guess at the moment, you know, there's three things about it that is putting it under pressure. And you mentioned the first one, potentially, it looks like there's overcapacity in the market. Just too much capacity. Now, if they're going to take this Russian resource further, and obviously it's additional supply, I mean, it's of course it's going to be negative for the industry. I think, you know, diamonds is competing against many other items more technology, etc., etc. These days for that marginal, that extra dollar to be spent. And in the end of the day, it is a luxury item. One's got to remember that. So, in light of that, it is a tough environment. As we've seen this year, demand is going to be sort of flat, or if not down. And you're going to see the effect. Obviously, we've already seen it, out of the likes of De Beers, etc., in terms of volumes. So that's the first important point. I think the second one also at the moment in the diamond market, as we all know, is Europe. Liquidity, funding in Europe. Up to 80% of a lot of these diamond transactions are geared. And if you don't have leverage or access to finance, it sort of, stalls down the whole process. So that is another factor, as we know, credit and liquidity or funding in Europe hasn't been that great. That sort of impacted the sector negatively. So I think on those two fronts, the sector is under pressure. And obviously we've seen Anglo-Americans, buying out the Oppenheimer stake,
Right.
at which many people would argue as being at a hefty premium, of which they felt was actually fair value in the market. Maybe back in 2011 when the environments were still nice and prices were still high, wasn't that obvious.
Sure.
Now it is becoming more and more, obvious that the price that they paid is probably had some premium in it. When one sort of look at it in the current environment. So the diamond industry is one which is suffering. I guess the same as the PGMs. That's the biggest client of platinum, in particular. Is feeling the stresses and the pain coming out of Europe, unfortunately, at the moment.
Okay, I want to touch a little bit about what's happening in all of Southern Africa in terms of as a region, and starting out talking about China's role in the mining sector, because obviously they play a huge role in terms of, I believe that they're South Africa's largest trading partner now. They're involved in every country, it seems like, in Africa. What has been their impact upon the mining sector in Southern Africa?
Yeah. Look, the most obvious one that we know is with Sizwe Platinum, where they've taken a controlling interest and put a lot of money. They are busy at the moment with developing that mine. And they seems to have fairly deep pockets. If one sort of look at the price that they pay, I mean, that investment is well underwater. But there seems to be this longer term strategic focus that the Chinese have on the whole continent, and obviously on South Africa and certain areas as well, where we see them taking advantage for assets that did come up for sale. Obviously on the gold space as well. Gold One, we've seen that, also taken a sizable stake there. So, where the opportunities do arise, they are moving on to that. If you want sort of, I guess, take a current sort of a stamp of where does the investment sit in terms of, the market value of those, then probably,
They're underwater.
A lot of them,
Right.
most of them are
Right.
underwater. And, but they have, to what extent they could, they actually did bring capital into the country and into Africa in general, to try and take advantage of this longer term theme. So it's been a theme. It's obviously in South Africa in specific. It's there's just so many assets that are really up for sale that will get past the government approval as well, etc., etc. But the intention has clearly been there, and even so, there's also been people looking to export material into China for processing. Chrome's the processing of chrome comes to mind, and the likes of those as well. So there's clearly a kind of relationship that is in place at the moment, and that one will likely see be the case going forward.
Okay, now I want to touch specifically on a few countries, and I will start out with having a chat about Zimbabwe. It's a country that's been in the news for all sorts of mainly negative reasons over the last decade or so. Yes, but within the last couple of years, with their indigenization laws that they put forward, they had a 51% ownership rule when it came to all their foreign companies, and that really impacted the mining sector, Zimplats and such. It's been a big story. How has that played out over the last little while in terms of your position here in South Africa, observing what's happening there? How has that 51% law impacted the mining sector in Zimbabwe?
Look, initially it was obviously a negative, when it sort of played out. More recently, obviously, we've heard about Anglo Platinum that settled with the government on the Unki mine in Zimbabwe, where they basically agreed on, handing over 51%. There's sections, obviously, it goes to communities and to employees and to a state-owned fund, and then a portion of that as well that is remunerated, and that there will actually the previous credits that were handed over to the government in terms of credits, those would be recognised. And if you throw everything together, look, it is at a discount,
Right.
but at least it looks like there's some consideration. Maybe a 40% discount to original or the value that you could have had before, there was any sign of other shareholding into the company in terms of the local people and the government, etc. So, but expectations have been lowered, and we've actually seen that when the news did break, there wasn't major movements on the share prices as well, which speaks towards what investors has been anticipating for a while.
There was an expectation there to begin with.
Exactly, yeah, and we've done the same, here in ours. We've actually looked at these companies, and we've obviously tried to incorporate this kind of potential risk of a lose in type of ownership. So it is an environment, obviously, that is doing very well. I mean, in terms of mining, the operations there, if you go up to Zimplats, some of those operations are even better than what we actually see in South Africa. It seems like at the moment you've got more stability on the labour front. You've got more people want to work. It's a case of they want to take it forward in a very tough environment. And I guess there is people that's very positive about Zimbabwe, of saying these changes takes time to play out. And I guess one can just look at the numbers over the last couple of years from all fronts, how well they have recovered. Albeit, on an absolute base, they're still low, and, there's still a lot of work to do. But, there's positive developments in Zimbabwe at the moment. And in the end of the day, the Zimbabwe asset is very valuable.
Right.
If you get into an environment and you can get to terms, again, to get more certainty of certain terms that you want to operate under, and how you will cut the pie in the end of the day. Obviously, it will be great for the rating on the share, and on the investment. So, but as investment in Africa and many other emerging countries it's risky. You spoke about Russia as well. There's been a lot of uncertain factors also playing out of that of late. And some people are even calling Russia as uninvestable at the moment. The bottom line is you got to price in those type of risk when you do investments. And Zimbabwe is very rich, not just in terms of mining, agriculture as well. And they've got a lot of potential, So it is a question of risk reward. And at the moment it looks like they are moving towards a point where they can at least get a platform of a bit more stability, and hopefully from there on grow their assets, and try and again, increase the size of the pie for all stakeholders.
Now, moving over to Mozambique. Mozambique now has the world's largest coal mine. They seem to be really opening their doors to resource extraction. What's happening in Mozambique right now?
Look, obviously we've heard of Anglo American, I think earlier in the year, announcing their interest also in the area. And as you mentioned, it's a great resource, But like in many cases, there is infrastructure that you need around these areas to really and fully capitalize on that. So it is potential, of course, but again, like we've seen, and I guess it speaks towards the theme of Africa in general. I guess sort of if one do take a step back and sort of look at growth in Africa, I mean, you can just look at all the investment banks, how they sort of over the last 24 months or so, or 3 years, has started to put down offices in South Africa and trying to be into Africa and capitalize on Africa and the opportunities within Africa. So we've definitely seen, that trend continuing. And I mean, Mozambique is no different. It is an area which is very rich in terms of those type of resources, and ultimately it will attract the capital. And you will get your processes more formalized, I guess, around that. But I guess it will take time.
Right.
And I think that's the one thing one got to remember about Africa. It takes time. It maybe takes longer than you anticipate. It's not a one-day game in many cases. It's not something that play out overnight. So I think one got to be realistic also about that and the time frame on many of these potentials.
Final question for you. How do you feel in general terms? Are you bullish about the state of where mining is at in Southern Africa and what the potential is, not say in the near term, I mean more in the long term, 5, 10 years from now? Are you optimistic about where things are going in terms of development along those lines?
Look, we've seen great advancements being made, obviously, on our rail infrastructure in terms of our exports of iron ore and coal. You know, we've got some of the best iron ore mines in the world. You know, the coal assets is also very good. We've got our unique positioning within the PGM space, and particularly within platinum, you know, where one just got to understand the market environment currently and manage that well. Mm-hmm. You know, there's also some potential beneficiation, I guess, from those fronts as well. You know, a lot of the technology is already in South Africa. You know, so there is a lot of opportunities in many areas to sort of capitalize from. You know, I guess if you look at many of the commodities, if you look in terms of resources, you know, there's plenty. Yeah, a lot of them would require higher prices to sort of incentivize those type of production. But, you know, ultimately I think we've seen it globally at the moment. You know, the copper is maybe one example where we've seen globally grades have been falling. And again, the so-called low-hanging fruit have almost been picked, and you've seen grades are declining year in, year out. And so we've seen in many other commodities, you know, it's always sort of, you know, you've got moving parts in the whole global trade and production of commodities, you know. So it is a country which is extremely rich in terms of resources. Obviously what we got to see now is some more stability and leadership obviously coming through in terms of labour and labour relations and how those will be managed going forward. You know, to I guess in a way just give more stability or a better platform, you know, to attract capital and to grow assets, you know, going forward.